What's up, guys? I'm going to go over today's investor Q&A questions. And I just kind of want to share those with you guys live as we kind of go through them. So one of the main questions that we get is, what are the minimums? Like, I changed the minimums from $100,000 minimum to $200,000 minimum. So someone asked why we did that. One of the bigger things is because I wanted to let more people involved and get more people involved in investment. In March last year, the SEC came out with a no actions letter that basically said if your minimum investment is 200,000 or $1 million from a business, that qualifies you as a potential qualified investor, meaning I don't have to go do a bunch of pushing and prodding and asking. Now, you still need to know what you're doing. But the thing is like that $200,000 minimum is now seen to the SEC as a substantial investment and allows you to get involved in some of these investments. So that was one of the main reasons why I did it, because it's a lot easier to go to you guys and say, hey, if you have $200,000 at least to invest, let's kind of look at the potential investment. That allowed me to actually talk to more people. That allowed me to go to my network of investors and people that follow me on social media, Facebook, Instagram, LinkedIn, and just say, hey, if you can at least invest $200,000, let's talk about the opportunity that we have right now for our fund. So that's why I did that. Um, the other question we get is, Victor, do I have to set up an LLC? No, you do not. The fund is already set. We already did all that stuff. We already paid the money for the legal and we set up the fund structure and things like that. So you can invest as an individual. You can invest as an individual. You can invest for your family. You can, it could be you and a spouse, whatever that is. But you don't have to go and set up a whole separate entity just to do your investments. If you have an LLC, like if you're going to invest on behalf of like your company or your business or something, by all means, you can do that. But you don't have to do that to set something up to make the investment. So that was one of the other questions that we get from some of the people interested. What's the other one here? What are your fees that you charge? So because it's a fund, we do have fees. So we do a 1 in 20 split. Blackstone, Vanguard, a lot of these other companies that do their fees and all the other stuff, they charge anywhere from 2 to 3%. Some of the other syndicators I've seen charge 3%, a 3 and 30. So they'll charge 3% fees as well as 30% on the profit. We do a 1 in 20 split, meaning we do 1% asset management fee, so 1% a year, and then we do 20% we take 20% of the profit on the back end. 80% goes to the investors and 20% goes to us as a firm. So that's there. With another fee that we have what's called an acquisition fee. You guys already know this because you're either an investor, you're a limited partner in syndications or other funds. You've invested in private placements before. So in real estate, we do a 1% acquisition fee. So let's say we bought a $50 million asset. We do $500,000. That's what that'll work out to be, a 1% acquisition fee. That is for us putting the deal together, setting up the company, all the costs that it took to get that deal, that takes care of my team, takes care of salaries, takes care of leasing, overhead, and all the costs that it takes, as well as later we get the 1% for as long as we're in that deal per year for managing the funds, managing the capital, and managing the asset. So that's our fees. Let's see. Oh, there's another fee. I like to talk about it because everyone's like, oh, what about this one? Well, I do a 1% refinance fee. So let's say we're in the deal for 5 years. I go back to the lender because you don't have to sign on the loan. I'm doing that. And I say, we're going to refinance the asset. I charge a 1% acquisition fee because I'm signing on loans. So I do that. That also takes care of the cost. It takes care of my thing. And we're resetting that loan. If we do it in 5 years from now and I sign a new loan for another 5 years, that 1% of the loan amount, we're going to take that because, again, that covers it, pays for my people, pays for salaries, pays for overhead, it pays for running the fund because somebody has to run the fund and that costs money. Raising money and running a fund is not a free event. It's a business. It's a business activity. So I like to share that with people so you understand. We're not overcharging for fees. 2, 3% management fee, that's crazy. Sometimes it's 0.75% like Blackstone, but they manage trillions of dollars. So you're going to have a range, but we think we're well below industry standard at doing a 1 in 20 on the fees. Let's see. What else here? Will I get a K1? as an investor? Yes, you do, because you're coming in as an investor in this deal. Now, because you're investing in a fund, so you are an investor in the deal. So you're a limited partner. We're the general partners, and you be coming in as a limited partner. So you will get a K1 as an owner. So you get the tax benefits, you get pass-through tax benefits for you as an investor. So that is a part of what you do, what you're going to receive as a limited partner. So to answer that question, yes, you do get a K1. The other one was, how long is the investment term? So we have structured the fund, or I've structured the fund for a 7 to 10 year hold. That's the fund term. We're going to be in the deal for 7 to 10 years. Now, I can refinance the deal or sell the deal at any length of time during that time, but I wanted the fund term to be anywhere from 7 to 10 years. And I also put in that I have the discretion to go past that time just in case. As you guys can tell, the worst thing that can happen right now for any person is to have to sell a great asset at the worst time, which is what we see happening right now, which are the deals that we target. So when I structured this, I saw a lot of people in my past and other cycles have to get out of a great deal at the worst time because they didn't have any more time. So we set up this fund and probably every other fund as a 7 to 10 year hold. And then during that, I also get the opportunity at my own discretion to extend the fund term for another 7 to 10 years if I have to, because I'm going to protect your money the same way that I would mine. And as a firm, we need to do that because our number one job is protect capital. And we can't do that if we run out of time. All deals are great deals if you can keep them, and people run out of time if they don't do that. So let's see. Did I go over can I invest through my IRA? Yes, you can. You can invest through your IRA, or if you have a qualified 401k, and we have actual strategic partners that we work with to be able to do that. We work with Equity Trust, and we also work with Preferred Trust Company. So if you have questions about whether your IRA qualifies, reach out to us. You can reach out. You can go to our site, schedule a call, or you can text 760-531-8500. Text the word IRA, and one of us will reach out to you and we'll put you in contact with our custodians that we work with to be able to make sure that, one, your IRA qualifies, and then two, to get you set up to where you can convert your IRA or 401k to a self-directed 401k IRA, and you can be able to invest in the fund as an investor. So let's see, what else did I not answer? Um, can I get my money out if something changes during the term? The answer to that is no. This is an illiquid investment. So if you have to get your money out early, if you think you can't be in a deal for 3, 5, 7, 10 years, don't invest. This is a long-term investment. It is an illiquid investment. Unlike stocks and shares and things like that, where you buy a share and you can liquidate your share tomorrow if something happens, that's not this. This is a real asset. It is an illiquid investment. So um, and I'll be honest with you guys, a lot of people don't like that. I do. I think being illiquid is a better way to plan for have a long-term investment because you can't get that capital. Once you invest in it, you know your investment's there. If something happens, emergency, something you have to come up with another way. You have to utilize your own business to be able to function. If you had to so somebody came and was like, hey, I need to borrow some money. You can't. You're like, dude, I don't have any money. My money's tied up in investments. That's really how it should be. So this is an illiquid investment. Can you get your money out? No. Could we buy you out? Maybe we could, or you want to liquidate your shares and let us absorb those shares? Maybe that's a thing. I tell people that because it's an option. But to answer that question, is it an illiquid investment? Yes, it's a liquid. Could you get your money out? No. Um, let's see what else. I think that's it. Oh, what happens if I pass away? Could your investments go on to a family member? Absolutely. That should be a great question. Some people, I have it on here too. People like, what happens if I die? And then people have asked, what happens if Victor dies? If you die, we will know, where do you want your investment returns to continue to go to? Like your cash flow, passive income, and also, like, let's say we sell or we exit a deal, where do you want your proceeds to go? Are they going to you? They're going to your spouse? They're going to your grandkids? They're going into a trust that you set up? All of these things we can help you guys with by calling in, and we can definitely walk you through that as you talk to somebody on my team. The other question, we'll answer the other side of that. What if Victor dies? What happens to my investment? Nothing. We have third party managed property management companies the operating agreement, the PPM, all the other stuff for this fund will continue on. It's structured that way. This is a company. It's not the Victor Bell Show. I'm not holding your money. The money's not coming to my personal account. Like I said, so if I die, it'll be business as usual. The tenants won't know. The property management company will continue to do their job, and our team at Bell Capital will continue to function the business as the company the way that it was structured because this is going to be it'll continue on. So the death of Victor won't affect your investment. Um, and those are the main questions that I got that people asked. Um, the other thing too, a lot of times people have asked me in the past, they're like, hey, um, will I make more money? I'm trying to debate whether I should invest my money with you or to do my own deals. Will I make more money doing my own deals? The answer to that is no. I'm always going to make more money doing deals, more money than you will if you went to do your own deals. Why? You aren't going to have accountants. You aren't going to have an investor relations team. You won't have an acquisitions team or an analyst on your team. Um, I'm just going to do deals at scale. And because I'm doing deals at scale, because we're dealing with bigger deals and I have a team, I'm going to negotiate really hard on lender fees, on legal fees, on any fees that I can drive down, I will. I'm going to dispute the taxes. I'm going to do all the things that you won't be able to do because I can do it at scale. So I'm going to get a better deal. Even if we bought the exact same deal, I'm still going to make more money on that deal because I'm going to fight hard for every little penny. And you may not be able to do that because you have to operate this business at scale. And that's not against anybody. By all means, you're welcome to do your own deals. But I can tell you in my career, I've always made more money investing with somebody else or other people investing with me than doing it on my own. This is a team sport, especially doing the type of stuff that we're doing, building Bell Capital, going to do fund after fund after fund. And you coming on board as a passive investor or a limited partner in the fund, I promise you, it will be a better investment than you turning around and trying to do it yourself, dealing with tenants, toilets, termites, evictions, bad tenants, fires, kicking people out, bed bugs, all those other things that go along with this business. So if you have your own business, you don't need two. You just need to take your money and invest. Trust me, I'd rather own, the seed of a watermelon than 100% of a grape. You just make more money. Trust me, it's less headache. So those are those things. I wanted to go over those, but these are the questions that investors have asked us. People are interested in investing money with us at Bell Capital. I understand there's millions of places for you to invest your money. And I don't take it lightly that you're interested in investing with us as a firm, as a company. I promise we won't let you down. And thank you for trusting us for those that are interested. If you have more questions, leave me a comment. You can call or you can text 760-531-8500. You can put invest or you can put IRA or you can put deal. Or you can go to our page, you can go to bell-capital.com, schedule a call, or you can go ahead and register. It says investor portal, register your account. That's free. That's how we communicate with potential investors. You can review the documents, you can do your own due diligence, you can talk to one of us on the team, and we can help walk you through the paperwork and answer any questions you have about investing with us. We're here for you. We want to be a real estate resource for you guys, for investors. And we will always be doing this for you guys because we want you to be our partners and come invest with us. The minimum investment is 200,000. So if you have at least 200,000 to invest right now, we'd love to talk to you about investing with us. And let's see, anything else I wanted to add from this? No. All right, whatever. So if you guys have questions, I don't want to take up too much of your time. We're here. I'm willing to answer them. Somebody on my team's willing to answer them. Any questions at all, we're here to help you. All right, let's talk soon. Have a great day today. Let's get after it. Boom.